Hey, turn on the microphone. Hey, good morning. Hey, the webinar software is acting really strange today, so now it's not loading. Let me try this again. Always weird. Open, click me. So all right, so I think you can hear me, right? Funny thing is, it's actually blurred, so I can't see you. Hang on. Connecting. All right, we're almost there. Cool. All right. So hey, good morning, everybody. Extreme close up. Hey, good to see you. Hey, it's Tuesday. It's inflation week in the United States of America, which is a really exciting day. Wow, look at that. I just noticed my charts aren't running. I'll have to fix that. So it's Tuesday. What is it? The 13th? Somewhere in there? Yeah. Tuesday, March 13th, 2018. Very nice. It's your daily Forex trading strategy session. Let me remind you that trading is risky, appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. It bugs me that there's I don't have my charts on. All right, hang on. Let me fix that. All right, there we go. Right as rain. Very nice. So welcome to Forex.Today. Yesterday we went through the website. We went through and looked at some of your trade plans. Very well done, I must add. We went through the commitment of traders report yesterday. We went through the calendar yesterday, so we know what's going on. If you missed that, I would suggest watching the video. And also, you can watch the videos on YouTube. Make sure you subscribe on YouTube, because now I've been running live streams on YouTube. It's been working pretty well. I kind of like it. I think other people like it as well. And the nice thing is, if you subscribe, it goes bloop. Wayne's running a live stream. Okay. So hey, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Let me show you my business card. Ta-da! Cool. My name is Wayne McDonald. I've been a currency trader for a very, very long time. And as we discussed a couple of days ago, we went onto a long-term Euro USD chart. You know, maybe it was this one. Is this? No, of course. No, we were on this chart, and I was trading. I was trading. I was trading Forex down in here. This is when I became a currency trader. And yeah, notice these are monthly candles. Oh, whoa. Yeah, so that's like year 2000 stuff. But I do remember the second that the euro crossed over a $1 mark. We crossed over parity. Like, wow, that's a long time. So anyways, I'm here on behalf of Traders Way to share the experience that I've gained technically and fundamentally and even psychologically psychically, no. With the hopes of you becoming a success. I mean, that's really what it comes down to. Because in the long run, for a broker, a successful trader is more profitable than a failure trader, right? So think of it that way. If we can find a way for you to thrive, not just survive, but thrive, it's good for you and it's good to them. They simply want to be the prime broker to your successful Forex trading business. And that's a business model I can align myself with. We do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. We ask that you show your loyalty and respect for attending these live events every day by visiting tradersway.com and opening at least a demo trading account, at least. And then give them the opportunity through execution speed, through low fees, to world-class customer service, that they earn your loyalty and respect as well. All right, so let's look at the world. Hello, world. Let me do something here. Over the driving rain, baby. I will go to a thing called what? Hang on. That's what I wanted, was a drop down. All right, calendar. Up 600 points from yesterday's hammock USD yen. Whoa, Barry, that sounds like a cigar fund donation to me. It's, Ron and I think one other person contributed to the cigar fund a month ago, and I saved up and stuff, and I bought something really nice just recently. It just arrived yesterday. All right. Oh, yeah. So I wanted to do today. Get rid of that. Today. 600 points from yesterday, huh? Barry's thinking there's something to this hammock thing, right? Nice. All right, so here's what's on the schedule today. CPI. I think I messed up your chart. Let me do this. Yeah. Oh. That's better, right? Cool beans. Cool beans. So CPI, it's the doozy, right? It's the biggie. That's everybody. It's the one that everybody knows of. And what do you use? CPI though. I got a question via email today about someone that took the fundamentals course at FX Bootcamp. And no, I'm not doing this for a plug. No, really, honestly, I swear to you. I got it on my phone if I had to show you. So this person took the fundamentals course, said they loved it, learned a lot, but they have trouble deciding each month where their bias should be. And CPI is going to be a part of this, right? And not just CPI, because when you're analyzing Canada or Australia or Timbuktu, you simply want some sort of measure of inflation. CPI is definitely an imperfect measure of inflation, but you still have to have some sort of gauge of inflation. Because really, why do we even care about CPI? Does anybody know? And if not CPI, PCE. And if not PCE, some other. Or if you don't want to measure inflation, you could say, well, instead of prices, why don't we measure units? So that would be not GDP, which is a nominal number, but it'd be real GDP, or use the use of a GDP deflator. You could say, well, there's productivity, which might be some sort of form of inflation. But why do we care as currency traders? Hmm? Well, it's even simpler than that, Pete. Pete's got on the right track. It's central banking policy. And Ron says risk on, risk off. Well, yes, but that's usually due to a perceived change in central banking policy or some other type of risk, like a geopolitical risk or something exogenous. Oh, that's the big boy word for the day, right? An exogenous variable or an exogenous shock could create risk on and risk off. But as far as analysis is concerned, because that can always happen, right? Right? There could be an earthquake today, San Francisco slides into the ocean, and you're like, oh my gosh, that's huge news, right? That would be very bad, and markets would move. But you can't realistically put that into your economic model, right? You're like, well, but what about the whole San Francisco thing? Can you imagine? You're just hired at Goldman Sachs to run some department, and the lead economist just comes in and gives an outlook for the U.S. economy, and you're in the back, you're like, hey, yes, new guy? You're like, yeah, but what about that whole San Francisco thing? And they're like, what San Francisco thing? Well, it could just slide in the ocean. Just like, boom, it could happen. I saw it on the internet. It's 40 million times more likely to happen this year than any other year before. So we should put that in the model, right? So anyways, so yeah, economic model wise, we measure inflation because inflation is usually part of the mandate of the central bank. Central banks manage monetary policy. Monetary policy is basically monetary money. It's like how much money there is available, the money supply. Okay? And we know if supply goes up, typically a value goes down. The supply of anything, the supply of apples, right? When you're in a desert, right, surrounded by sand dunes, and you see this, they're like, yeah, this apple, even though it's half eaten, it's still $100. You're like, $100? We're like, this apple we imported from Canada, it's still fresh. It's still cold from the cold Canadian nights, right? And now here it is in Arabia. And you're like, whoa, it's expensive, right? Because it's the only apple there. I've actually had very good fruit in places like Dubai. But they eat a lot of dates, not necessarily fresh apples, right? Especially historically. But what if you're in Canada and, right, for $100 you can get a dump truck full of apples. There might be some worms in it, but they're Canadian worms and they're awesome. So anyways, you're like, wow, right? What am I going to do with a dump truck full of apples? Give it away. Hey, you want some apples? Give them to friends. Go into a party, bring a bottle of wine and a sack of apples. People do it, right? They're like, oh my God, here comes Wayne. He's bringing more apples from his yard. Great. Well, as soon as he's gone, throw it in the garbage like last time, right? So when supply goes up, value goes down. Now, if you're a manufacturer, you probably know every time you double production, the cost per unit drops by 30%. You know? Now, if you take that model, what if you double production again, and then double it again, and then double it again, and then double it again? Exponential now. You get to the point where cost per unit is like free. Isn't that weird? Yeah, Guy, that's the right way to do it, right? But you know, right? You can get to the point where if every person on the planet had an apple tree in their backyard, apples would be free, right? If every soul on earth had 100 apples a week available to them, you're like, I don't like apples. They're like, you'd consider apple trees like weeds. You're like, you haven't cut down your apple tree yet? What are you waiting for? They're horrible. They drop food, you know, all these apples everywhere, and they just rot, and they're full of bugs, and you got to get rid of that thing. Yeah, it's like, right? You live on a deserted island, you're like, coconuts, they just give me diarrhea, right? They're a natural diuretic, right? Great for losing weight. You don't want to have the runs, well, on a deserted island. Let's just put it that way. So, whoa, long story short, inflation matters. Money, because it'll change the policy at the central bank, and the policy at the central bank will affect money supply. Now, some central banks have more than one mandate, but generally, the central bank looks after the money supply. So more money, lower value currency. Less money, higher value currency. That's generally true. Now, the one caveat to that is, you know, the rules of engagement for the reserve currency for our planet is a little bit different. But everything else, you know, an economist loves saying this, all else being equal. I'm like, what the hell does that mean? I come from the real world. What do you mean, hold everything else equal? How does that work? But all things being equal, generally, if it's not the reserve currency, if interest rates do go up, money supply goes down and the value of the currency goes up, and so on and so forth. Okay. So, long story short, how do you change your monthly bias? I don't have a monthly bias. My bias for the dollar typically lasts years. And I told people probably a year and a half ahead of time what would make me go from a dollar bull to a dollar bear. We waited a year, year and a half. And then the event happened. And then I made a big announcement like, whoa, right? There was a big thing. I probably dedicated a whole day to it, a whole webinar to it. And I'm like, I am no longer a dollar bull. Woohoo! I'm a dollar bear now. And I will be for a very, very, very long time. Was anyone actually around there? Like, I know Daniel would have been. Anybody else? This would have been the day the Fed announced their tapering. Yeah, okay, Guy was too. That makes sense. Yeah, you know, and I'm thinking that was my Atlanta office when I had that when I was in the skyscraper. That's how long ago that was. So 2014, maybe late 2014 ish. You know, like that's when I changed my bias. So I forget now who sent me the email, and I did respond in so many words, but I'm like, you don't have a monthly bias. My bias will change towards the US dollar when the central bank of the US dollar, aka the Fed, says we've raised interest rates too far. When is that going to happen this month? Is that going to happen in April? Well, what about May? What about June? Like, it ain't going to happen for a very long time. I'll probably graduate Harvard with my master's degree, which now seems a million years away, even though I'm half done. Now seems a million years away. It's it's getting to be a grind. Oh, yeah, I'll probably still be a dollar bear. Isn't that interesting? Cool, right? But you have to also understand that other central banks around the world are in different processes. Okay? And so you want to look at all of these different things. So yeah, CPI comes out. It's important, but like the reason I pick on it is we're interested in what the Fed thinks. The Fed doesn't even use CPI. Like I said, the cost of VCRs is probably in the basket for CPI. And they're like, look, inflation's so low, right? And then a real person goes out and buys healthcare and then picks up their kids at daycare, right? And then fills their tank full of gas, drives to the grocery store, right? And wants to buy a steak. Like in the United States, hamburger, you know, the ground up lips and eyebrows of cows, right? Just the garbage they just grind up and put into a patty. And it's not even in a patty, it's just in a big blob, right? That's like $6, $7 a pound now. And that's the garbage stuff. I'm like, wow, that stuff used to be dirt cheap. Like poor people would eat that. There was a time when you took like ground up hamburger and you put it in a pan and you put this god awful spice all over it and maybe a can of tomatoes, but or no, it'd be like a can of ketchup or something, right? And it's like, better hamburger helper, or put some pasta in it too. Um, and now you got to be rich to do that stuff. We're like, oh my God, I can't believe this. I'm eating this garbage and it costs, 13 bucks just for the protein to feed my family. You're like, this is dog food. You're like, wow, right? Yeah, an organic, 20 bucks a pound. Well, I thought all cows were vegetarians, right? Anyways, right? Yeah, Barry, it will be on YouTube, absolutely. I run at about 9. Okay. So anyways, long story short, I don't know how accurate CPI actually is in inflation because it's still pretty expensive to put gas in your car. Seems like even poor people are spending $30,000-$40,000 on new cars, right? A new car, $45,000 for a Ford F-150. Like, what the hell's going on with this planet, right? So, and then you put gas in it, it's fairly expensive. And, like I said, insurance, daycare, cost of children and all this stuff. All of a sudden you're like, damn, it's actually pretty expensive. I can't even buy hamburger helper for under 10 bucks. You're like, what is going on, right? Well, prices are going up, so there are other measures, and the Fed uses PCE, which uses a basket as well as CPI, but the math is a little bit different, and basically it comes down to the basket changes in a more flexible way, so it's supposed to be more accurate, all that kind of stuff, but whatever. So that's what drives Forex trading. I don't really care about CPI. I don't really care about NFP. I don't really care about PCE. I don't care about PPI, retail sales later in the week. What I care about is how the central bank interprets the trends in these data, in these data sets, data, and then decides to or not to adjust their policy. So, for example, if the Fed just says something under Powell And Powell comes out and says, yeah, we're going to continue raising interest rates just like Yellen started, but I think we're going to raise a little bit faster. That's what matters. You see what I mean? That's what matters. And he doesn't even have to say it. The market has to think he said it. The market could be wrong, and then you get the swing back the other way. But the point is, if they think the central bank might, or even probably, but might make a change to their policy, it could be not just raise interest rates or lower interest rates, but at what speed and all that kind of stuff, then the value of the currency should change. So I only watch these other things so that I can decide whether the bank's going to respond or not. Okay? So with that in mind, Pelosi's going to do a speech. That's going to be important. Right? Bank of Canada, I should say, right? Bank of Canada is going to do a speech. The Reserve Bank of Australia is going to do a speech. You get the Bank of Japan meeting minutes. This is all stuff that you should read because it's going to help you decide what's going to happen in these central banks. And in particular, you're going to ask yourself, how will it affect, if at all, monetary policy? If it won't affect current monetary policy, then the current trend in valuations for that local currency on a global basis should stay on trend. Okay? If the data sets, in this case the news releases, are off trend, that may change or affect policy at the central bank, and that then in turn may change the valuation. Okay? So it's cause and effect, what we're playing. So there's a lot of stuff you should be doing today. Now, this here out of Great Britain, that's going to affect fiscal policy, not monetary policy. Fiscal policy is government spending. Sorry, big no-no. Government purchases. Sorry. If you say government spending, you're going to get the question wrong. G is not government spending. G is government purchases. Because the government can spend money and send a transfer payment to somebody in the country, and that's spending, but that's not a purchase. But here's the thing: if Trump decides to build one more tank for the United States Army, hoorah! Wait, that's not Army, is it? Anyways, if we build one more tank, that is a government purchase because they took money and they had a tank made. That's productivity. We have one more tank. But transferring money to someone on welfare or a retiree, that's spending, but that's not a purchase. There's no productivity. Okay? All right. Too much? Is that too much? I feel like that was too much. Okay. All right. Well, namaste. Well, Ron, you've done the fundies course, right? So I think you know that. Oh. All right. There's the peso. It's a bummer that I'm not in it, huh? Took the shot and everything. This is nice though, isn't it? Just the fact that it is working out. Look at that, huh? Holy smokes. Big move in the last 15 minutes. It's not a good weekly trade though, is it? The one thing I do see here is price action. And do you ever get spooked out on a move like this? The way to adjust for that, and maybe I should draw it just to make sure everyone's following me, right? At some point, you get things like, oops, yellow's a little difficult, right? You know, you're trying to do basic things like this, but it's the other moves in there that complicate it, right? Lower low, lower high, lower low, lower high, lower. Oh my gosh! Oh, right. Oh my gosh! Right, like oh my gosh! Right. And really, it seems to me like this is what Elliot Wave was, or Elliot, whatever his name is. I don't think his last name is Wave. Hey, that's Mr. Wave to you. That's what he's trying to figure out. Okay. So the complication here is it's all price action, but at some point, all you really need to do is just say, well, it's a 4 hour move, right? And that there's a fractal nature where you have to line up the 1 hour in this case with a 4 hour. Okay. And it's fairly straightforward in that case, right? And here's the one last thing I want to comment. So many people get caught up in counting waves or waiting for MACD cycles and all these things. I think the most important piece of information on this chart, oops, is this. Okay. And the most important piece of information, not on this chart, is we talked about it happening as this was rising, as this was rising, as this was rising, as this was rising, and we said, yeah, somewhere around here, we believed it was going to fall. It's not, there's no information on this chart that would tell you that, but we talked about it this day and this day and this. Not yet. Wait, maybe like 2 more days. And it's like, oh, we're super close, but not. It's supposed to kind of really happen in here. And then it was that Thursday, that Friday, So we're talking about it going into the weekend. Yeah, this really should drop. I ended up selling it about here, and son of a, I don't know, messed up, right? But that's what I think is most interesting is we saw it coming. Uh, so I don't know when you enter on the price action and all that kind of stuff. But that's once the decision's made, there's a lot of potential here to get in, right? So there's exotics. I think this looks interesting for Rand. Move this a little closer. There we go. Oh, you want to buy it? Okay. Okay. So I'm looking sort of at this area. Okay. And then I look at this area. Okay. This is a bearish sell pivot. Okay. It made a significant drop into this area. This is where a bull is supposed to buy. That's the hammock bullish wise. But you had to have already done it. So to do it sort of now, because this, this buy here, if you were a bull and you buy it, your assumption was we're going here. Okay? It hasn't done it. And that changes the probability a lot. You didn't see that. I think I got one of those Canadian worms in there. All right, so yeah, so that was already supposed to happen. But a bear is thinking this now is the new sell pivot. So they're still in the game. Okay. This falls. This is the bullish pivot. It's sort of weak, right? So where, if you were to design this on paper, where's the next entry for bears? And it's actually this pivot. Okay. I think we're working our way back down to a range. Okay, but we're in this dangerous area now where I think the good trades are gone. Right? I think that was a good trade. And I think that was a good trade. That might have been an okay trade. That might have been an okay trade. You know, now you notice it's diminishing, right? Or maybe you want to do it that way. So, you know, trading it in here is sort of silly either way. Okay? But if you're just kind of doing something now, you've missed the weekly swing trade anyways, so I'm not sure what's going through the mind. Maybe it's an emotion thing. Let me change a template here and see what else is going on with South Africa. Yeah, so yeah, same thing. This was a sell, and that's it. You know, like that's it. The monthly swing is done. Okay. And the reason I say that's it is there was never a buy on a monthly basis. This was good on a weekly basis, price action basis, just not a monthly swing. So for that to kind of work out, bulls need to kind of now start to use the monthly central as a launching pad. Does it look like it's doing that? Not to me. I think it'd be awesome for a bull, like awesome sauce, right? If you saw it like hit the central and do, really hit it and bounce right off of it, like you're like to the pip type thing or very close to it. This stuff, I don't see the respect. But that's opinion. That's very subjective. Okay. Hello, hello. There's a place called Vertigo. But you give me something that's real, real. Yeah, 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 yeah. Is it getting better? So we got CPI in a few minutes. It's a beautiful day to trade. To let it slip away. It's a beautiful day. Touch me. Hold me close. Don't ever do. Ooh, ooh, ooh. So what do you think? 2.2, 2.1, 2.3? How about 2.1? I don't think you want me to cover Rand on this. Get around, get around. I got a Rand, yeah, get around. Whoa, I got a Rand. Boo-doo-doo-doo. 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 All right. 1.7. Yeah, they ain't gonna happen. Come on, bro. Yeah. Guess we don't need monthly, huh? Oh, please. That almost looks like a trade plan. Don't you love trade planning, guys? I mean, you gotta love it, huh? About 90 seconds, I think. Get around, get around. So we've been at 123 for a very long time. Since late January. So it just depends if you're selling, buying dips or not. Less than a minute. So let it go to wait. Wait for it. Let me drop in. Should be now, right? Should be now. Wait for it. Okay. Not a lot of reaction so far. So what do you think about it? Oh, well, there we go. Kind of a delayed reaction from the market, huh? Buying dips still working, right? So how do you think they're reacting to it? So core stayed flat, right? And headline rose month over month, right? So it's not oil prices, but it's a sign the economy's healthy, right? Juan says bought at NFP. Yeah, well, of course, right? look how, I don't know, it's pretty clear. So where are you going to be challenged? Where are bulls going to be challenged? By the way, just if you can't read this, this is a little easier to read. Okay, core. Let me expand this out. Ooh, don't need that. Hang on. This would just have to commit here. All right. So you have core 1.8 as expected. Headline 2.2 as expected, but up from last month, right? So it's not oil, it's something else in the basket. Okay. Could be increase in demand for VCRs or something. But you're going to be challenged here. Oops. This is the line. Okay. There are bears waiting. Touch me. Very nice. Trying to zoom in there in a proper fashion. I'm going to draw it there off the bottom, not off the wick. Let it go away. Well, to me, Juan, it's the same thing, and I keep trying to drive this through. This is why I don't trade USD yen often. Okay. So inflation in this case is sort of the good inflation. There's some growth, which is necessary, and it's not too much. It's not too fast. You kind of want a 2.2, right? Forever, really. Now, if it was 2.5 and growing, this would become a problem, and the Fed would have to raise interest rates more quickly, and that could diminish into corporate profits. And if companies don't make as much profit, eventually the stock market will come down, all that kind of stuff. And you go through a business cycle. But right now, it's like, no, this is a healthy level. Doesn't seem to be out of control yet. The Fed seems to have the right type of policy in place to deal with this. So the market kind of likes it. Now, I interpret the market likes it with a weak dollar. And that's where a lot of people disagree with me. But to me, when everything is right as rain, the dollar is weak. Yeah, yeah. That's where news could really affect you, right, Juan, is the amount of volatility to your portfolio. And that's where, some people would argue things like diversification would help. But I'd rather you not just, if you're going to trying to make money. I mean, if it's retirement account, sure. But if you're trying to make money, I'd rather you not diversify. But if you see undue risk in your positions, then that's where futures and options are important for hedging. And they're just an insurance cost, right? So, anyways. Aussie on the move. Very nice. Here's our USD CAD. So for some reason I have it up on a daily chart. And let me back out. We have this fibbed down for a sell. I've drawn a gray area for a sell. And here's my Fibonacci level for selling. What? And then that's the central pivot, right? As well. So an improving economy in the United States should increase demand for oil. That should, and other commodities. That should be good for Canada. That should be good for Australia. That should be good for New Zealand. Right? Should be good for the Mexican peso. But you can see the role reversal going on, right? Breakout, retracement. It's nice, right? If you were a buyer of this, you had your opportunity and now you're praying. Don't worry, it doesn't hurt. Never hurts to pray. But you can see the bears were waiting, and they did exactly what they're supposed to do. So here's the reversal price right on the 3-2, even though it's not drawn quite right. At the time it was. It's still a pivot, which is, so anyways, let me highlight, so it's a pivot. It's sort of an old fib that just looks good right now, but this is definitely a role reversal. I mean, look at it, it's actually 2 touches here. It's a pretty obvious sell if you're a bear, right? And what's the most important thing? That you were already a bear. What are you going to do now? You're going to wait for your big opportunity. And even like the euro dollar trade, right? What are you going to do now? Well, okay, you're going to wait for a pullback and all that kind of stuff. That's cool, but this was a Friday trade, wasn't it? This was a Sunday, or sorry, a Monday trade, right? So even though I teach you how to scalp and spot and all that kind of stuff, what I'm trying to teach you is this is where your money is made, right? Brady's still in it from Friday. That's cool. That's where the money is made, right? That's how you need to trade. But we got to put this in perspective, right? So that's where bulls buy. There's no doubt about it. Doing anything else is just unbullish. It's against the constitution of bullism, right? If you didn't buy down there, you're an ing cow poop. But what if you're a bear? You have every right to be a bear. What if you're a portfolio manager managing a euro dollar ultra short fund? What's your trade plan? What's your trade plan, sister? Yeah, it's this area right here. You have to be watching it. You have to be watching it, right? If you are a bear, you're not deciding to be a bear. You were a bear this morning, you were a bear yesterday, you were a bear last week, right? And you're asking yourself, is this line in the sand going to turn the candles green? Or is this line in the sand going to turn the candles red? And if it's not there, it's going to be much higher, right? Way up here, buck 35-ish. No, I can't read that. Buck 20, I can't read that. What is it? 24, sorry, buck 24, 30. Anyways, and that looks, I don't know. I don't know if anybody wants to do that trade. Way up here. Yeah, so it, excuse me, it has to be here or it's going to be a double top. If I'm a bear, those are the only two things that exist in my reality. If I'm a bear, this is my price and this is my price. And that's that. And everything else is just amateur hour, right? Hmm. Look at that, huh? Yeah. Cool. So I'll see you on YouTube. Will you join us for the live chat? I got some work to do and stuff, but I will be around. So at about 9 o'clock, which is in 15 minutes, I'll see you on the YouTube channel. If you subscribe, all you do is log into YouTube and it's like, hey man, Forex.Today is streaming live, brah. Then you can join and chat with me over there while I giggle through the morning. So anyways, thank you for being a client to Trader's Way. Thank you for posting your analysis and such on Forex.Today. So peace on earth. May the pips be with you. May your profits be above average. See you tomorrow, huh? I'm already looking forward to it. Trade safe.